Welcome back to Forex Pros. Again, we will be discussing the market of gold, doing the multi-time frame analysis and seeing how simple is it to analyze the market of gold and get the opportunities that we need to make some profits from the market. So without any delay, we will be moving directly to the market. And before we do that, I want you guys to know that you can join my Telegram channel where you will get free signals, and the link is in the description. So do join the Telegram channel. You will get free signals. It's amazing. People are making a lot of profits from it. So let's start from the monthly time frame. The monthly candle has closed, which we talked about in our previous analysis. And what we can see is that the market did break the previous high of the previous monthly candle. This is something important which we do not notice, we miss it, but you need to understand, you need to mark the previous highs and lows of the previous monthly candles, especially in the high time frames like weekly time frame, daily time frame. So on the monthly time frame, the market did close above it, and we can see that we got a huge rejection from the upside. A lot of people are now expecting different things, but what the market is trying to tell us that most probably when the next monthly candle starts, it will try to go and cover the wick. And moving down on the weekly time frame, again after a big move, a big impulse, what do we expect? We expect the market to give us a correction. And what we can see is that, like I told you, you need to mark the highs and lows of the previous candle. On the weekly time frame, even though after trying for 2 weeks, market was not able to break the low of this particular weekly candle. So it means that the market has still not started its proper correction. So for that, market needs to go up before coming back down again. So proving our point that we discussed on the monthly time frame, that the market should try to cover the wick. Moving down on the daily time frame, now this is something interesting because when you mark this resistance area, which was previously the support and now acting as a resistance, market broke below this resistance area, support area, and now has retested. What do we expect? We expect the market to continue its movement towards the downside. At this point, you will understand the importance of multi-time frame analysis. The reason being that is monthly time frame is indicating a bullish momentum. Weekly time frame is indicating a bullish momentum. But the daily time frame here is telling us that the market should come down. Before that, as we have discussed in our previous analysis as well, that market did make an M pattern before coming down. And whenever we see an M pattern, what do we expect? We expect the market to give us a retracement up to the bottom neckline before the continuation or towards the downside or the upside. That is something that we do not know. We will be discussing what the market is telling us, and from that, how can we react. Moving down on the 4-hour time frame, now this is where things get more interesting. Now if we want to vote, monthly time frame is on buy, weekly time frame is on buy, daily time frame is indicating a sell move. On the 4-hour time frame, what we can see is that the market did break below this region, and from that, what we can see is that market made a low, then a higher low, then a higher low. Now if we were to connect these lows, what we can see is that the market is forming a triangle. And what kind of triangle would that be? It would be a ascending triangle, because the lows are moving towards the upside while the resistance remains intact. So most probably, if the market plans to go towards the downside, it should give us a break towards the upside, at least up to 42.40, before moving towards the downside. Another thing that you need to understand, that the market did try to break below this particular region. It went down, and again for these many 4-hour candles, you need to understand 1, 2, 3, 4, 5, 6, 7. That means for 28 hours consistently the market tried to break below this region, but it was not able to. So this is another indication that the market should go towards the upside. But one thing, that people are losing money because you see the analysis is quite simple, there's nothing much to understand, but a lot of people will try to take the buys from here and a lot of people will try to take the sell from here. One thing about the market, the monopoly of the market, is that it is never you can never be 100% right. There is always a possibility of being wrong, and that's where the stop loss exists. So if you take a buy from this point, you need to put your stop loss at this point, and of course you can hold the market up to 42.50. or 4240, that is more than 2000 pips. But what if the market comes down? You need to make sure your risk management strategy is so good that even if you get the stop loss hit, you are able to trade again multiple times. You do not risk like your whole margin in a single trade. Like if someone wants to trade more safely or more securely, what will they'll do? They'll wait for the market to break above the structure resistance, and on the retest they could take the entry. But again, you need the stop loss, you need the proper risk management, so that when the market does the retest and for some reason it could be a fake move towards the upside and market could come down from this point. So your risk management needs to be really good. And if you want assistance in that, you can join our Telegram channel. The link is in the description, where when the market gives out the opportunity, we do send out the signals with proper TPs, with proper stop loss, and we are on a mission to achieve 20,000 pips in the next 12 months. So you can be a part of that mission as well. So I hope you liked the analysis. I try to make it as simple as possible and as educational as possible, so that after watching the analysis, you'll able to understand that everything that I discussed, every fact that I discussed was pure fact, nothing else. That's all for today.